Hello, thank you for joining us today and welcome to 2023. My name is Dave Mantell. I'm a certified financial planner and partner with Stabler Wealth Management, and I will be your presenter today. So for today's webinar, we're going to cover how to maximize your Boeing employee retirement benefits. This is especially a good time of the year to be looking at this as we have the entire year ahead to implement and put in place any changes that make sense for you. So for today's agenda, we're going to cover a few different topics. We'll kick off going over how the increased 401k contribution limits landed for 2023 and how to take advantage of those. We'll look at the traditional versus a Roth 401k as well as IRA options and what may be the better fit for you. We'll shine a light on why using the mega backdoor Roth is still a really fantastic strategy that's available for Boeing employees. And then we'll wrap it up in terms of how to tie all these to your own retirement plan and financial goals to make sure you're using all these tools in the best possible way for your situation. Before we jump into the presentation, a little bit about us. At Stabler Wealth Management, we're a financial planning firm. We specialize in working with Boeing employees and retirees. We have an expert team of certified financial planners, CFPs on board, all of which fiduciaries. And we really focus on providing expert, personalized advice to our clients from a team that truly does care. You can find more information about our firm as well as how to contact us by going to our website. The quick page is www.planyourboeingretirement.com. So launching into the presentation, we'll start going over the 401k contribution limits, which increased quite significantly in 2023. So taking a step back, there's really four different categories regarding your 401k and savings plan as an employee at Boeing. The first of which is the traditional pre-tax bucket. And so the way that this works is any funds that you put into the pre-tax bucket, the traditional, will reduce your taxable income today. So they'll save you taxes. You're going to show less income on your tax return. It will grow tax deferred, but when the money comes out, every dollar of future withdrawals for you and your heirs is going to be subject to ordinary income tax. Additionally, as Boeing does its match, their contributions go into this traditional pre-tax category. So again, when it comes out, it's all going to be taxed as ordinary income. The other bucket, which has become more and more popular as of late, is a Roth option. So the way the Roth works is when you contribute to your Roth 401k, you do not get any tax savings today up front. It does not reduce your income for income tax purposes. All the growth is tax deferred. However, on top of that, when the funds are accessed in the future, both your principal and growth, there's no tax on any of it. So you're not saving tax on the front end, but all the growth can be accessed tax-free down the road. The after tax is a third bucket. So this is sort of the extra overfill bucket once you've used up either your pre-tax or Roth buckets. And so the way it works is once you fill up the pre-tax of a Roth in a given year, Boeing has the option where you could put additional in the after tax. Whatever you contribute to the after tax does not reduce your taxes today like the traditional pre-tax, does not reduce your income. Likewise, if you leave it in the after tax, it does not grow tax-free. You can't access the funds tax-free down the road like the Roth. However, when you contribute funds into the after tax, you could flip them to a Roth account. And so we'll get into that in a little bit more detail in the mega backdoor Roth section. But that's an overflow account where once you fill up the pre-tax and a Roth, you could do additional into the after tax. The fourth bucket, the supplemental savings plan, the SSP, is another Boeing specific program. And what it is a deferred comp plan. So the SSP is Boeing's deferred comp plan. A lot of other companies have these as well, but it's a mechanism to allow you to provide more tax deferred savings. And in doing so, you can do even more on top of those other buckets in a tax deferred account What goes into the SSP does have the advantage where it's not shown as income today. You're deferring the taxes. So we'll reduce your taxable income today, whatever you put in. But similar to the traditional pre-tax, when the money comes out, it's going to be taxed as ordinary income, every dollar. One big difference between the pre-tax and the SSP is that the SSP is more rigid coming out. So when you put funds into the SSP, supplemental savings plan, you have to decide how it's going to come out in retirement. And you have a few different options, whether it's evenly over 10 years, et cetera. But it's going to come out in that format. You're going to have less control when it comes out. Furthermore, there is company credit risk with the SSP plan. Your pre-tax traditional 401k as an ERISA plan, it is separate from Boeing's general account. It is protected in that regard. The SSP, while Boeing will have mechanisms to protect that money, you're taking company-specific risk. So there's a lot of prior history of companies going through default or bankruptcy where their deferred comp plans were compromised. And so again, that's a low likelihood, but it is a risk out there. And with its rigidness, as noted before, does not necessarily make sense for everyone. So going into the contribution limits, so with 2023, we saw an increase across the board and a sizable increase on how much you could contribute, much of which explained with the high inflation that we've had elsewhere. And so into the traditional or Roth 401k bucket, you can put in 22,500 per person for 2023. And so this is a $2,000 increase from last year. So pretty meaningful. In addition to that, if you are age 50 or above, you could do the extra catch up. And so that's another 7,500 on top of the 22,500 that can go into either the traditional pre-tax or the Roth 401k. So that brings you to a total of 30,000 across those two buckets if you're 50 or older. And again, the catch up went up about $1,000 or $1,000 from a prior year. So between the two, that's an extra 3,000 that you could put in from 2022. Also, with that after-tax program that I mentioned, between the after-tax and the Boeing match, you can have an additional 43,500 go into your 401k. And so the way this works is that the total, and this is assuming you're age 50, so you get the catch up, the total that can go into your 401k each year, not using the SSP, so not with a deferred comp plan, the total is 73,500 for 2023. That's a $6,000 increase from a prior year. And so you could do 30,000 between your traditional 401k or Roth 401k plus catch up if you're 50. And then there's another 43,500 room, which consists of what Boeing contributes plus the after taxes a gap there. And so if you're age 50 and using all these different tools to the fullest, you could put in 73,500 a year in a tax beneficial way in your 401k. So a really strong amount through all the tools and flexibility that Boeing offers. In addition to your 401k, there's also other retirement tools with tax advantages as well that you can possibly leverage. The first of which is a traditional IRA or Roth IRA. So this would be set up outside of 401k, with a brokerage account, for example. And so the 2023 limit is $6,500 per person. That went up $500 per person from last year. And that's either to the traditional or Roth IRA. You can't do that amount to both. It's an either or. If you're age 50, you get a catch up here as well, an extra 1,000. So that's 7,500 a year. And so on top of the 73,000 plus you could possibly put in through your 401k, you could potentially do another 7,500 a year to an IRA or Roth IRA. Health savings account is another terrific tool. Those are pretty neat where you get the best of both worlds in a sense, where what you put in reduces your taxes today, like a traditional 401k or traditional IRA would. And then when the money comes out, as long as it's used for medical health related purposes, there's no tax on it either. And so you could invest that in growth oriented funds, just like a 401k or an IRA. And then all the growth is also tax free, as well as a tax benefit up front from the deduction, as long as it's used for approved medical. And you could use those for Medicare premiums down the road. And so, again, you'll have plenty of opportunity, trust me, to use that health savings account in the years ahead. Couple notes, to contribute to the health savings account, you need to be enrolled in an eligible health plan, which means a high deductible plan with a limited out of pocket. So it's something we could review with you to determine if you're eligible or not. And Boeing does contribute some if you are in a HSA approved plan. And the amount that you can do as a family is $7,750 a year per family. And if you're over age 55, which is a catch-up age for that, that's an extra 1,000. So that's 8750. To note, to contribute to the traditional or Roth IRA outside of your 401k, there are income limitations. So if you make too much in funds, it's going to be more challenging to do this. Even if you make over the phase outs, so for example, 218,000 if you're married filing joint, 138,000 for singles is where you're typically, make too much to do a Roth IRA directly. There is a way through a backdoor Roth to still contribute to that possibly. So again, that's something we'd be happy to review with you to see if that makes sense for your own picture. Yeah, I noted a little bit earlier on the Boeing SSP supplemental savings plan. And so again, it's another deferred compensation plan where you could do even more tax deferred savings, but you do lose flexibility of your contributions and withdrawals. So if you do elect to do that once a year during the end of year election period is when you can make your determinations. And you're sort of locking into all your 401k retirement contributions if you do the SSP. And like I noted, there is some, risk, creditor risk, if Boeing has solvency issues. And I would just note, as I went through on the prior two slides, given the after-tax option of Boeing, it's really rare where I do think see where an SSP plan contribution makes sense for folks. Because if you could contribute with what Boeing puts in, nearly 75,000 through your 401k, plus, you could possibly do another 7,500 a year into a Roth or IRA, maybe more, for your spouse as well. On top of that, maybe through the health savings account, you could do another large chunk. We're looking at, close to, 90,000 you could contribute in a tax deferred way without leveraging the SSP. And so, again, that's a big portion to put away, right? Generally rule of thumb, if you're putting 10 or 15% of your earnings into a 401k, that's a really healthy contribution. And so we got plenty of space in those more traditional offerings in most instances without having to use a more rigid, limited SSP plan. So I've noted quite a bit the traditional pre-tax versus a Roth option, both in the 401k and IRA. So let's dig into that a little bit more. So I get the question a lot, which option is better? And it depends entirely on your own personal situation and your financial plan. There are a few considerations though. The first of which is comparing what your current tax bracket's going to be versus your future tax bracket. So again, rule of thumb, if you're in a higher tax bracket today than you are going to be when the funds come out of your 401k plan, you would, in most cases, be better off doing a traditional 401k, traditional IRA, where you're able to reduce your income now when you're at a higher tax rate versus when you're going to be down the road. As I'm going to note in the coming slide, though, we do have very favorable tax brackets right now, which has made the Roth more attractive in many instances. You'll want to look at your other retirement income sources, right? Your pension, Social Security, required draws from your 401k, IRAs, pension lump sum, retirement plans. You'll want to take a look at the current composition of your retirement accounts. How much do you have in Roth? How much do you have in, brokerage, non-retirement account? How much do you have in tax deferred IRA, 401k? And then also your estate and beneficiary plan. We've had some new tax laws come into effect in the last few years with the Secure Act. They just recently passed Secure Act 2.0, and this has a big impact on retirement draw plans and especially wealth transfer to your heirs, which may make a Roth more attractive in many instances. Yeah, one term I've thrown around quite a bit that I'm sure many of you are familiar with from watching our other webinars or meeting with us is the Boeing retirement tax headlock. And so what that means is when a lot of Boeing retirees are in their 70s and well into their retirement, we've seen they're in a much higher tax bracket potentially than they are in their prime working years. And that seems a little backwards, right? Because you're thinking, I'm making, good income right now. I'm in my peak working years. When I'm retired, I'm going to have less income or spend less. But the reality is your traditional 401k, pre-tax 401k, your lump sum benefit if you take the lump sum on your pension, your monthly pension if you go that route and taking the annuity, are all taxed as ordinary income upon receipt. Similarly, Social Security is also taxed as ordinary income, the bulk of it. And so once you're 73, they just push the required minimum distribution age, which is when you're forced to take draws from your 401k and IRA accounts, whether you're spending the money or not. But at age 73, you're going to be forced to take a certain draw from your retirement accounts, your IRAs and 401ks, traditional. And every year as you get older and as the balances grow over time, you have to take out more and more and more. And so at age 73, you're looking at under 5%. But by the time you're 90, you're approaching on 7, 8, 9%, depending on your longevity. And so that is all going to be taxed as ordinary income, whether you use it or not. And furthermore, your family, as you look in the future, may also be taxed at a higher ordinary income tax rate on your retirement plans. A couple of examples of that is if you're married and you're married filing joint, when one spouse passes, you go from being a married filing joint tax filer to a single filer. And that basically means all the tax brackets are truncated or shrunk in half. And so someone who's filing married that may be in the 24% tax bracket might find themselves, in the 35% tax bracket once their spouse passes and they're a single filer, because they're going to have the same amount of assets. They're going to have the same required minimum distribution potentially, but they're going to be in a much narrower tax bracket. Furthermore, as I alluded to on the prior page with the Secure Act 2.0, in the Secure Act, a lot of your heirs and children and beneficiaries can really be in a tough income tax spot when they retire a 401k or a traditional IRA, where the rules currently are they have 10 years in most cases to withdraw out those funds. So if you have a lump sum in a 401k that grows throughout your retirement, and down the line you're looking at a 2 million, even $3 million 401k with portfolio growth over the decades. If you have two children, for example, that inherit that, they're going to each inherit potentially half, have to draw it out over 10 years, and that's going to be all taxed as ordinary income when it's drawn out. And so they may be showing, several hundred thousand more of ordinary income each year. Even if they don't want to spend that, they may be intended to go to their children or, be deferred down the line. And so again, this retirement tax headlock is something we see more and more often coming into play for Boeing retirees. In addition to that, I noted the decision between a Roth or a traditional 401k is what tax rate am I in now versus what I'm going to be in the future when the money comes out. And so part of that too is trying to say, what are tax rates going to be in the future? And while we don't know what tax rates are going to be down the road, we do know what the tax rates are today and in the near term. And they are quite favorable from a historical perspective. And so this chart here shows married filing joint tax rates, just for illustrative purposes. If you're a single filer, in most cases, it's approximately half of those tax bracket ranges at each tax rate. But as you can see for 2023, a married couple can show 364,000 of taxable income. That's after your deduction. So with a standard deduction or an itemized deduction, that could be close to 400,000 of gross income in a year and still only be in the 24% ordinary income tax bracket. We know that in 2026, if no tax law changes are amended, we're going to see the current tax laws that went into effect uh, during the Trump presidency revert back to the Obama administration tax laws. And so everyone's tax rates are going to go up for the most part. And so, for example, somebody showing 200,000 of taxable income in a year, a married filing joint couple, is currently up at 24% tax bracket. Let's use 250,000 as an example at the 24% tax bracket. That income would be in the 33% tax bracket starting January of 2026 if we don't see any of the tax law changes amended. And so that's nearly a 10% increase. So it's really sizable. And you could see throughout the chart, the tax rates go up in line at every level. Beyond that, we don't have a state income tax currently. While I don't envision that in the near term, we have seen some tax law changes in Washington, putting a foot in the door a bit for that being a possibility. And if you're going to retire in a different state, right, a lot of folks move to Arizona or different states, maybe with a little more desirable weather. Other states do have state income taxes quite commonly. And so, right now we have a window of really low tax rates, no state income tax. So that could be a good time to plug money into Roth. Yeah, you're not reducing your taxable income today, but you're getting it in there shielded from taxes at a really manageable tax rate. And so just like the other scenarios I was lining up, this is a very person by person situation. And there's a lot of factors that go into this. So we do tax projections every year for clients. And therefore, we'd be happy to look at your own picture with you. Because again, it's not a, broad brush. This applies to everyone, or this is a way to go. It's going to depend on your own situation and really getting under the hood there. So I hit a little bit on the after tax earlier, and so that brings us to the next topic, the mega backdoor Roth, which on this slide I show equals retirement game changer. And so what that is like I noted before, if you're age 50 or older, you could do 30,000 in your 401k, either traditional or Roth for 2023. Additionally, Boeing, which a lot of companies do not have this option, by the way, but Boeing has the after tax option. And what this amounts to for most folks is you could do an additional 25,000 plus a year into your 401k in that after tax character. As I noted, you do not want to just keep it in after tax and keep it invested there and growing there, because all the growth in the after tax is going to be taxed as ordinary income when it comes out. However, these after tax contributions can be converted to Roth. And so you could put funds in the after tax right away, convert those over to Roth without any tax ramification. And then all the growth will be tax free in your Roth account. With the change to Fidelity the past couple of years, I understand they do have the option where you can call Fidelity and say, hey, for my after tax contributions, as soon as they hit, please convert them to Roth right away. I don't want them growing and accruing in the after tax bucket where the gains are going to be taxable. So that is an option. Another option is you could take your after tax money, even if you're still working at Boeing and under the age of 59 and a half, and do a rollover of just your after tax into an outside Roth account, like a Roth brokerage account, for example. And the benefit of doing that is if you have an accrued after tax balance, for example, you can convert that outside to a Roth. That way it could start growing as a Roth IRA. If you're not 59 and a half, by getting it to an outside Roth account, even if you're much younger, for example, if you're 40 or 45 and working, once it's in that outside Roth account, after 5 years from the date of conversion, you could tap what you contributed in there without any penalty or tax, even if you're not 59 and a half. So it does provide a lot of flexibility. Furthermore, a Roth is a great place to be more growth oriented because you never pay tax on the growth. At your 401k at Boeing, you can't specify, I want this money invested, the traditional invested more in this mixture, and I want my Roth invested in this mixture. So by moving into an outside Roth account, you have that flexibility. And if you have a balance, an after tax that is accrued, again, I really suggest getting that rolled and converted or rolled to a Roth account so it could start growing tax free. However, you want to be careful about doing that in Boeing within a current balance. So for future contributions, that's okay because you have no growth on those. Next paycheck, you contribute to your after tax, flip it to Roth right away at Boeing. If you have 40, 50,000 in an after tax at Boeing, however, much of that, even after this recent market, is likely growth. And if you convert it to a Roth at Boeing, it would be taxed at that time, all the gains, which we don't want. By rolling it to an outside Roth, it won't be taxed. It can be deferred. And so again, this gets a little bit, hairy, but something that's really powerful. Really, big fans of folks taking advantage of this. Um, you may say, well, I'm maxing out my 30,000 401k, and that's a lot of money, right? I don't want to put more money into that. This is how much I want to be doing. But if you have an outside like brokerage account, just a non-retirement account, we might want to look at, hey, should I be doing more into my 401k through a mega backdoor Roth, even if it means moving my, non-Boeing brokerage account and using part of that to fund the money to get funnel more into Roth without tax. And so, again, this is one of you could see my eyes lighting up, right? This is one of my favorite, retirement planning tools using that mega backdoor Roth. So again, yeah, really encourage, reach out to us and chat with us on this. Again, a little bit of hair on this, but a really powerful tool that can be a game changer for your retirement. Yeah, to kind of go back, here's just an illustration regarding dollars, right? So you can funnel a lot of money into your Roth accounts as a Boeing employee. You could put 30,000 a year if you're age 50 into the normal Roth 401k between the 22.5 Roth plus the Roth catch up. You could do, again, for many cases, about 25,000 after tax, which can be flip over to Roth right away. And you could do an additional traditional Roth IRA outside of Boeing or backdoor Roth, which again, I could chat with you on, of 7,500 a year if you're age 50. And so, that's 60,000 plus a year each year that can go into that Roth bucket. If you do that for 5 years, that's 300,000 in a Roth plus investment gains. That could grow over your lifetime tax free. Your children could inherit that as a Roth tax free. If tax rates go up down the road or you have a big expense in retirement, you could tap some of that without any tax implication. So you're not stuck in that retirement headlock, right? Where you may be in a really high tax bracket in a given year. And so again, a really neat tool for retirement planning. And so, yeah, to kind of wrap things up, we covered a lot of tools and benefits, many of which specific to Boeing that you can really take advantage on in 2023 to set yourself up on a great path for retirement and also drive a lot of tax savings over your lifetime. And like I noted, everyone's decisions should be different, right? And so what you really should do, this is a great time at the start of a year to review your retirement plan, review your financial goals, review your map, and see how these different decisions and tools fit into that. In that way, you could be laser focused on using the right tool for your situation and doing so in a really intentional way. Yep, for all of our clients and even prospective clients that we meet with, we'd like to put together a financial plan using our planning software, as well as kind of a executive summary, financial action checklist that we call it. And so these are all key items that would go into that. And so again, yeah, I really recommend you reach out to us and we'd be happy to look at this with you. As noted in past events and webinars that we've done, take us up on our free second opinion on your investments and retirement plan that we're happy to provide. We're offering a 1-hour complimentary financial review to look at your personal financial picture. And that could be included looking at, Roth versus traditional options. Should I do a mega backdoor Roth? How do I best approach that? And how much do I need to be saving to be in a good retirement place? How should I be invested as a result of that? And so please take us up on this. Again, there's no obligation. It's a great chance for us to meet you, see how we can help you and be a fit. And so to get the schedule, you could contact our office. Our number is 425 646 6327. Or you could send an email to Sean from our team, Sean at stablerwm.com. Again, we're Stabler Wealth Management. And we'd love to get this scheduled and review your financial roadmap with you. Thank you again for joining our webinar to kick off 2023 in the right way. We're going to be holding future webinars and seminars in the months ahead. We really look to do to each one of these every month. And so you'll be seeing another one coming in February from us covering other key topics. Please extend these invitations to your colleagues, pass them along. If you'd like someone to be added to our communications list, feel free to send us their email and contact information. We'll add them. In addition to this webinars, we keep a lot of real current topics and key information coming regarding tax law changes, economic environment, quarterly economic reviews and reports. And so, get on our communication list and we'll make sure to keep you up to date. We also post this information on our website, www.planyourboeingretirement.com is a link to our Boeing page. And we hope to see you at future webinars and have you continue to participate. Again, I really appreciate your time. Thank you for joining today. And please reach out to take us up on that complimentary review or if you have any questions for us as well. Thanks so much and enjoy the rest of your day. Take care.